What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had another successful bear trap as we continue to push higher into some very critical resistance levels. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 1.57% and we did go up on slightly increasing volume compared to yesterday's bear trap, and I did tell you that low volume selling in a bull trend is more often than not going to be a bear trap, and that is exactly what we had yesterday. So today's price action breaking out to a new daily closing high and pushing into that price target at 416 does tell us that we are coming to some very critical resistance, and it's going to be very important to pay attention to the triple Q's analysis tonight because we are getting very close to battling the bear. On SPY, the bears will show up at 416 and at 421, so we are now at the point in this market where there is going to become more resistance and we're not going to have such a smooth ride higher. That does not mean we can't go higher, so do not confuse the word resistance with an impenetrable wall. We can go higher, we can break resistance, but it is a level that we want to pay attention to, and we definitely want to watch price action very closely at these levels. The definition of following price action is having no biases, so if we hit any of this resistance and start to see rejection and high volume selling, we are instantly going to expect a pullback of significant value that could take us all the way back down to some critical support levels. So for that reason on SPY, I would definitely up your risk level to at least 409 or possibly even as high as 412. Because you will not want to get caught holding any bags if we do reverse course. So I will repeat that there is very critical resistance at 416 and 421. That does not mean we can't go higher, so don't just assume that you're going to blindly short at these levels and have a guaranteed profit. You still have to respect the fact that we're in a strong bull trend and there is still a lot of short squeezing going on. So as SPY starts getting bullish breakouts above resistance, it could be a very impulsive trip higher, which means SPY could actually go all the way into the 430s, where there is going to be a much larger bear waiting at that resistance trend line. So yes, we are coming into critical resistance, but no, that does not guarantee that we have to go lower. So you still need to watch price action very closely at resistance, and you still need to understand that we are in a very strong bull trend in the short term, which could start to break out and develop into something much bigger. So use critical support levels right around SPY 409 to 407, and of course down here at the 50 EMA, which is much lower, down around 399, but I do not suggest using 399 as a risk level. That is just going to be a critical support level to use if we do start losing our support trend line. Overall though, the market structure remains bullish, and a lot of people have been doubting this bull run the entire month and going all the way back into very early in July. Yet we continue to go higher, so at some point you need to realize you're not being objective, and the chart is confirming we're going higher even though you continue to doubt it. On the Nasdaq 100 triple Qs, we are up 2.72%, and the triple Qs are on a very interesting level because we are getting ready to battle a very significant bear. There is a double resistance right around triple Qs levels of 324 to about 326, because if we break above these critical resistance zones, I do believe I will be saying this is the end to the bear market, and I know a lot of people are going to be very annoyed by that comment, but that is how I read this chart. If the triple Qs do start closing above 326, it is going to look like we hit the bottom and the bear market is over. That doesn't mean we won't get any more pullbacks, and that doesn't mean we won't start to form higher lows. That simply means that we will never take out this low back here, which is right around 269, once we start getting consecutive closes above 326. That is how I view this market, and you're welcome to your own opinion. But as you can clearly see, we are very close to having the full bull trend once that 20 simple moving average crosses back over the 50 EMA. So we are very close to going into a very strong bull trend. And I do not care whether or not you think it's possible or whether or not we should go into a bull trend, because I'm only looking at the chart and that is what the chart is saying. So triple Qs are going to have a very strong battle at this resistance, and it will be for control of the market. If the bears successfully defend this resistance, I still do believe that we are in a bear market. If the bulls break through this resistance, I think the bear market is over, and it's going to become very apparent over the next couple of months. So for that reason, it is going to be very important to watch price action at this extremely critical resistance zone, and well-defined risk levels in the triple Qs are down here right around 314 and 307. If we lose those support levels, it is likely we are losing the bull trend, even though we will still have critical support down here right around 301 to 302. So I continue to tell you this is a very bullish chart and we continue to go higher and squeezing out the shorts. So I do not suggest piling into the short positions because those are the positions currently getting squeezed and you do not want to be part of the crowd that is throwing fuel on a bonfire. On the Dow Jones, we were up 1.27% and the Dow Jones did reclaim the support trend line and did get back over the 5 EMA. So it does look like the Dow Jones is coming back up to retest resistance at 329 and then 333. 333 will be the bull breakout that will lead to a short squeeze, so that is a very critical resistance level. You can stay bullish as long as we're above 324 and about 321, but get a lot more cautious if we break those support zones because we do have gaps to fill to the downside. On the Russell 2000 IWM ETF, we were up 1.47% and the Russell 2000 is very close to the price target at 191, which is going to be a short squeeze if we do break above that resistance, so watch price action very closely at that level. The short squeeze would likely take us all the way up to at least $200, so that will be a very impulsive bullish breakout and we are getting very close to having the full bull trend. Risk is well defined at 187 and 182.5, so use those as your critical support levels and your risk levels to stay long in this market. On the ARKK ETF, we were up 6.08%, which is exactly what we would expect to see because we did gap up over resistance at $47, which is going to trigger a short squeeze in this ETF. You can see the volume is picking up as we're going to start squeezing shorts out of this ETF, which means ARKK should be well on its way to 52 and then 55. This is a false breakout as soon as we break back down below 47, so you are only staying bullish in ARKK while it is above 47, and as you can tell from the moving averages, we do have the full bull trend. So whether or not you like to believe this, it does look like the ARKK ETF is out of the bear market and getting ready to go into a bull market. So do not short this ETF because it is in a very early stage of a bull trend and it could go much higher if we continue to hold this bullish breakout look. On the VIX, we were down 8.35% as we see the VIX getting crushed from that resistance at 24, which is exactly what the bulls want to see. The next bullish development in the VIX will be the breakdown below 20. So you will want to stay bullish while the VIX is below 24, and you can clearly see the VIX is in a bear trend. If the VIX breaks back down below 20, that is very likely going to confirm that we are heading into a bull market, so the bears will try to short this market and drive the VIX higher once it gets to 20. On Bitcoin, we are currently up 1.5%, and Bitcoin is currently trading back over the 50 EMA, so it does look like we are forming another higher low. So the next bullish breakout will be the breakout above 24,000, which should send us well on our way to 28,000. Stay bullish as long as we are above 23,000, and that is a very well-defined risk level. If we break back down below 23,000, we could be coming back down to 21,000, so just get a lot more cautious if we do lose that support. On NVDA stock, we were up 1.98% as NVIDIA continues to make new daily closing highs, and it does look like it's very close to testing that next resistance at 196. Above 196, we can start running into the 200s and possibly close some gaps above. So stay bullish on NVIDIA as long as it's above 180 or the 50 EMA at 175. If we lose any of that critical support, look out because we could be coming back down to 161 or closing the gap at 158. But so far, this looks like higher lows and higher highs, and it does look like we will test 196. But there's always the chance we don't reach all the way there, so do not just assume it has to happen. Make sure your risk is very well defined at this support zone. On Tesla stock, we were up 2.27%, and Tesla closed back above the 200 simple moving average for the first time in a very long time. So that is definitely a very bullish price action close. You can see Tesla has been going higher on very nice volume, and we continue to form new daily closing highs and higher lows, and those Bollinger Bands continue to expand, allowing Tesla to head higher. So for that reason, I do believe risk is very well defined on Tesla right here, right around 900 to about 905, and the next price target is all the way up there at 970. So while Tesla is above $900, it is very likely going to 970, and as you can tell, we now have the full bull trend. So this continues to give us signs that we are more than likely out of the bear market, and we are seeing these big tech companies leading the way higher. If we break down below 900, get a lot more risk off because we could be coming back down to 864 or 839. but so far this does look like a very impulsive bull trend. On Apple stock, we were up 3.82%, and Apple got a direct hit on our next price target at 166 after getting that confirmed breakout above 163. If we continue to go higher from here above 166, it looks like it's going to be a very quick trip to close the gap at 174. So as you can clearly see, Apple is on a very strong impulsive bull run. Apple is a market moving stock, so while Apple is this bullish, it is very likely the entire stock market is going to continue to trend higher. You can define risk very well on Apple stock right here at 183 and our 200 simple moving average right around 159, because below that we will very likely close the gap and test critical support at 157. On that breakout above 166, look out because we are going to continue to run higher, and as you can tell, we are going up on increasing volume. On the financial sector, we were up 1.5%, and we are back above all the moving averages after a confirmed bounce off the 50 EMA, so the next bullish breakout will be the break above 33.7. On the industrials, we were up 0.94%, continuing to head higher and getting very close to having the bull trend, so the industrials are still looking very bullish at this time. The healthcare sector was up 0.92%, consolidating right around the 200 simple moving average and developing that full bull trend, so it does look like we will continue to push higher from here. The energy sector was down 2.87% after getting rejected from 77.5 and breaking back down below the 50 EMA, so we will need to find support at the 20 simple moving average, or we're very likely going down to close the gap below. So jumping back over to the S&P 500, this is going to be a very critical resistance zone in the stock market, and it's going to be a very good test of whether or not we are still in the bear market. I continue to tell you this is a strong bull trend and we continue to push higher, so do not doubt the bull trend because price action cannot lie to you. A lot of you are learning that fundamentals are not how you trade the stock market, and you are quickly learning that price action is giving you much better signals than the current news headlines, because while we are in recession and while we are not getting good earnings, the stock market continues to go up anyway. Does that guarantee that we're going into a bull market? No, we will need to see the bullish breakout, but there's no reason guessing when price action can confirm any direction we're going from here. If we lose critical support, we can instantly get more bearish, and if we break through resistance, we can continue to stay on the bull. Don't overcomplicate it because trading is always about managing risk. So as long as you know your trade plan and where your risk levels are, you can trade this market with confidence, knowing that your risk is managed, and you can comfortably sleep at night knowing that you have a valid trade plan. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.